Hey, what's up, everybody? It is Wednesday, September 16th. We had the Fed meeting concluded today, and well, I'm going to talk about it. Let's just go over the markets. You know, I've been selling rallies in the stock market. The Dow was up over 300 points today. Everything was up, and then we sold into that. The Dow ended up closing like up 36, NASDAQ down 140, S&P down 15 or 16. We saw retail sales for August. I was kind of surprised because retail sales for August showed a slowdown. Now, I've been telling you that my corporate tax flows have been indicating a slowdown in sales and profits, but that's been happening. Those corporate tax flow slowdown has been happening in September, so the data is going to look worse next month. When we get the September data, it's going to look worse. Hang on one second. Got to shut off my phone. So yeah, I mean, the things I've been looking at have been correctly predicting what is going on. Today we had the Fed meeting, so you know, we knew what he was going to say. I mean, I really don't know what more I can say about this. I don't know how much more I can comment on this. This is just, you know, this is just really, really ridiculous policy. This is a kind of an institutional groupthink. Central bankers, it's the way they think, you know, keep rates low to spur inflation, yet the evidence is all around them. It's all freaking around them that the opposite happens. All right, you got Japan to look at. You got the Eurozone to look at. I mean, the evidence is all around them. So, I mean, they're just locked into this paradigm. It's wrong. And if we were not having this fiscal expansion, which is a record fiscal expansion, you know, we would be in a deep, deep deflation. The dollar would be surging. Gold would be tanking. But luckily, we're having this fiscal support to the economy. It's very large. And I think it's just going to continue. I mean, I don't see, even if Biden gets elected, I do not see spending being cut very much from current levels. So that's a good thing, because that's keeping the economy afloat. Now, again, that spending is not going out proportionally to people, unfortunately. I'm not the guy making policy, so don't blame me. I mean, if it was me, it would be a whole different ball game, but it's not. So it's basically a lot of corporate welfare. It's a lot of money for rich people. Regular folks are not getting that much, but it has helped. So yeah, the Fed is stuck in this paradigm. I call it the full Japan. They're using that model. This is a failed model. It is absolutely contrary to what they're trying to achieve. They don't understand that because, again, it's institutional groupthink. It's a kind of almost a cult-like belief system. And it's not going to change. And so today they said they're just going to keep rates low until 2023, which is fine. I mean, you know, but the other thing is they're still buying assets, 120 billion a month in assets. Powell says we're doing this to support credit to households. So like, he's also living in this, you know, Jimmy Stewart, It's a Wonderful Life building, the Bailey Building and Loan movie in his mind. Like, he believes like you got to give the banks reserves so they can lend out the reserve. It's not the way it works. Loans create reserves. It's not the other way around. So like, if you look at what the Fed is doing, and not just the Fed, I mean, if you look at the ECB, if you look at Japan, the Bank of Japan, which has basically bankrupted all the banks over there. They're zombie banks. They exist in the function of clearing transactions. That's it. Because they have been so inundated with massive amounts of reserve assets. I mean, they can't lend. They're all under regulatory constraints. You know, when you dump in all these risk-free assets, it doesn't leave very much room for them to create non-risk assets like reserves. So it's, I mean, across the spectrum, you could see also, you see also on the opposite side, look at Turkey. The Bank of Turkey, to stop inflation, raises the interest rate to 1,000%, which only increases inflation and destroys the currency. I mean, they're crazy. They're a bunch of fools. So, like, we know how to make money out of it. What I'm saying, we, people who are subscribers of me, people who understand MMT, and I'm not talking about MMT academics. I'm a trader, I'm an investor, I'm also an economist. I understand MMT, and I have the only applied approach to MMT, so I know how to make money out of it. Now, let me say this. I think what's happening here right now, and I'm speaking from a fiscal policy. I mean, you could throw away, at this point, the Fed policy is junk. Is garbage, okay? And they don't know what they're doing, and they pose as if, they're experts on this, and they're not. They just do not know. I talked about Ice Cube yesterday. I mean, that guy knows more than Powell. I mean, they patently do not know what they are doing, so you could just throw that away. Let me talk about fiscal policy. Now, what I've been noticing is that the fiscal expansion keeps getting bigger. Total spending is at almost 6.7 trillion. We're at like 1.78, almost 1.8 trillion over last year. The growth rate of spending is now starting. By the way, that's interesting because the growth rate of spending is starting to accelerate again from the low point that it hit on August 31st, I believe it was. So we're starting to see a pickup in spending. So this is interesting because more spending is accelerating, but you got those corporate tax flows which are telling you that sales and profits are going down. What's happening? I speculate that it has to do with, people are holding back. Why? You got the fires in California, all those fires that have been disrupting economic activity. You got other weather events. We had the hurricane a couple of weeks ago. We're having another hurricane now down in the Gulf. And it's hitting Alabama and these states pretty hard. We've had these riots, okay, in various parts of the country. You have election angst, election uncertainty. You got obviously COVID, which is still happening. There's places around the country now that are shutting down again. So, I mean, all this stuff, and I think all this stuff is temporary. I think we get out of it. I mean, the money pump is still happening, and, that's like potential energy. I mean, it is there. It's like a powder keg. It just needs to be set off again. But for now, people and firms are just sitting on the cash, and that's what's happening. Now, as soon as I see those corporate tax flows start to flip around, that's a sign we take off again. And when we take off again, this market's going a lot higher just because there's a lot of money being pumped in, still a lot of money being pumped into the economy. But whatever is freaking people out, whatever's keeping them from spending and whatever's keeping firms from spending and investing, and I just rattled off, a half a dozen different possibilities, maybe all of them together. I mean, confidence has to come back again, which I think it will, but it may take a little time. And so I'm just, I follow it day by day. But yeah, by the way, we had the dollar nailed today. I said when the Fed comes out with its statement, they're going to sell the dollar and then it's going to rally. So short-term traders, we made a lot of money today. We went short dollar, then they bought it back, and but longer term, dollar's going down. All right, everybody. I'll see you tomorrow. Bye-bye. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye.